right, let's get to our top story this morning. It's what's driving stocks ahead of the opening bells. It's the American employment picture. And obviously, given all the tariff uncertainty and threats of an economic downturn, a lot of people were looking to the jobs market to determine whether or not there was evidence of that. Now, at the end of the day, there's a lot of pieces to the economic puzzle to unpack when you look at the specifics of the job story. But the headline was a much better report than what Wall Street was expected. So I suppose some are breathing a sigh of relief for today. As for where we go from here, whether it's the U.S. or Canada, everybody is still wondering about that. So let's digest all of this and dig in a deeper way with Earl Davis, who's head of fixed income and money markets at BMO Global Asset Management. He joins us here in studio. And it is nice to see you, Earl.
Pleasure as always.
So the market seems to be excited this morning. Haven't been a lot of moments to be excited about in the markets over the last few weeks. When you looked at these U.S. jobs numbers, what did you see?
I would define it as encouraging, very encouraging number. So what was encouraging about it? Obviously, the job report itself, even with revisions, the 3-month moving average is higher. So that's a very good sign. Shows robust hiring in the U.S. still. Underlying. Because
they had some revisions for the prior months, which were, those revisions were a bit muted, I believe. But you're saying still overall, the trend is reasonable.
Yeah, so for example, this number came in approximately 40,000 higher than the market was expecting. The revisions for the past 3 months were down 60,000. Having said that, like as I said, when you look at it on a trend basis, employment still looks robust and good despite all the noise that we're hearing.
Okay, so I guess at the end of the day, people take each bit of information and try to make a determination on where we go from here. You know, one thing I'm not quite clear on with the jobs market is if tariff uncertainty is raising red flags around where the economy goes from here, does that impact the jobs market sort of as we're working through that? Or is the jobs worry one that we have to watch over the next few months by comparison? And because the market's always trying to sort of figure out where we're going as opposed to where we've been.
Yeah, I would say I'll start. It depends what you're looking at.
Okay.
So when you look at the economic releases, the actual data, the economic activity has been fairly constant and consistent. What's very negative are the surveys. When you ask about consumer sentiment, business sentiment, that's been negative. So that does impact hiring intentions a little bit. Having said that, hiring is ultimately driven by business activity, and you see that's doing pretty well. And I'd say what today's job number does, it starts changing what people are looking at. They're not as pessimistic as with surveys. So your consumer confidence, I would suspect that we've hit a low in consumer confidence, and we had those releases over the past week. PMI or business activity, I would suspect that we're close to the lows and would expect to see it pick up. Having said that, I'm significantly less pessimistic than the market. I'm actually increasing my exposure to risk assets here.
Okay, I want to dig into that because these are those moments where the market experts make their money. And, you know, we just got off a program where there was a conversation around diversifying away from the U.S., the uncertainty right now. We're deep into earnings season. You've got a lot of standard worry comments coming out of the corporate CEO. And, you know, if you ask people anecdotally about this tariff stuff, especially those who are reliant on the supply chain overseas, it's pretty scary stuff. And here in Canada as well, we're still trying to figure out where we go from here. But you're saying you're is it that you're constructive on the U.S. economy more so than you think than the average Wall Street player?
Yes, but I believe the consensus is coming more to this view. So let me tell you why.
Sure.
During early Liberation Day,
yeah.
Uncertainty. We had the uncertainty as well, too, in regards to what's the end game here? What's going on? We saw extreme volatility in the market or extreme price movement. And the reason why there was uncertainty is because President Trump wasn't reverting to Trump 1.0. He wasn't pushing to come back, but he was just going one way.
No
and the market
Trump put or anything.
Yes,
like
and the market's like, oh, what's going on? Equities are coming off. He's not reverting back to Trump 1.0. Having said that, 2 weeks after, or last week, he started making appeasements to, or like open to China to negotiations to best it. So what happens is we move from uncertainty to volatility. In uncertain markets, those are uninvestable markets because you don't know what the end game is. in volatile markets, you can invest because it's all about what does the economic data mean in regards to inflation watch or central banks? And we're back in that mode now, so it's an investable market.
And look, there's a lot of historical evidence that volatility actually is the friend of investors if you embrace it and don't run away from it, that it can be an opportunity. But I just want to be very clear to our audience. Obviously, most of your job is around positioning and fixed income, and we're going to talk about some of your investing ideas after the break. But what is your outlook for the U.S. economy from here, and what is your outlook for the Canadian economy from here?
Good question. So outlook we do not foresee a recession in 2025. For the balance of this year, we do not foresee a recession, possibly 2026, but we will reevaluate at the end of the year. So
is that the U.S. or Canada or both?
That's the U.S.
Okay.
Canada is a bit of a different story. We have a little bit of divergence here. There is still uncertainty with Canada, less so with the U.S. That uncertainty comes from both external in regards to tariffs and the renegotiation of the trade agreement, and internal in regards to will we reduce the interprovincial trade barriers, what's going to happen with Alberta. So there's still uncertainty here in Canada, but it's a clearer picture in the U.S.
And we are expecting some comments from newly elected Prime Minister Mark Carney today. And there's been a lot of talk about how this Liberal government, with the uncertainty, is ready to do things like spend. Yes. But if your call on the U.S. economy is correct, does that potentially take some of the pressure off of Canada's economy, do you think?
100%.
Okay.
So if the U.S. economy is doing well, we should do all right. Less so than before because of tariffs, but still do all right. Having said that, we do expect the growth to be higher in the U.S. than it is in Canada. And Canada, like I said, there's still a lot of uncertainty. We have to see what the policies come about and what the agreements come about. But we should do all right. U.S. should do better than expected.
Okay. Earl, stay with us. As I mentioned, Earl's going to take all of that big picture stuff and put it into investing ideas. We're going to talk about what he's watching in the bond market when we come back here on The Open.